Hello. Every day, wait, hold on. Every year on this day, something special happens. It is the celebration, the anniversary of the birth of the one and only my son, Damian Dunn. Happy birthday, Dame.
Thanks, Dad.
Well, Dame, I have prepared a song for you that I like to sing to you.
Wait, you or your AI friends?
No, I'm just going to sing it myself right now.
Wow, this is extra special.
Okay, are you ready?
Yeah.
This is your birthday song. It isn't very long. Okay. All right. So old and cheap. I feel bad.
That's fine.
Dame, still no Kristen. Still on maternity leave with young Margaret.
That's my understanding.
That is my understanding. Still on maternity leave. All right, Dame, this week, here's what we're doing. We are talking red flags of financial advisors. So that's to say, you got a financial advisor, you're interviewing a financial advisor, you're at a Starbucks, you hear a financial advisor talking to the people next to you. What are the red flags you should be on the lookout for? And just so you know, this is not a witch hunt. We are pro financial advisor. So we're just going to help you understand what to listen for, what not listen for. Hello, Rick. Hello, J.O. Hello, Quincy. Hello, Andy. Oh, hello, Chris. Hello, David. What? Hello, Reverend Renfro. Oh my gosh. That's nearly 7 people.
They're all here.
Dame, something else. We talked about this on the show. We talked about this on the show a couple weeks ago on the financial nihilism thing where young people are turning to things like leveraged ETFs.
Mm-hmm.
There was an article in the Wall Street Journal this week showing why leverage ETFs can be so dangerous. So a leverage ETF, for those that don't know, is, for instance, if the underlying securities within the platform in a normal sense, we're going to get a 10% rate of return. If it's a 3x leverage fund, you get a 30% rate of return. Of course, if it goes down 10% in a normal environment, the leverage fund will go down 30%. But these are meant to be short-term holdings, like you hold it for a day, maybe a week, maybe. But what people tend to do is they tend to hold them for much longer than that. And so, Dame, this story was fascinating this week. So MicroStrategy, also known as Strategy, is a stock that is linked to Bitcoin. And it's had a pretty good year. In the last 12 months, ending this past Wednesday, it's been up 28%. Okay, so
Great year.
Great year. And Dame, if you ignore the holding period part of what I just said about leverage funds, a person might be led to believe that, let's say, a 2x leverage fund would be what? 56%. However, based on how these funds work and something called volatility decay, which is an incredible garage band, over the same time frame, a 2x leveraged fund, while the underlying security was up 28%, the 2x fund was down 65%.
Yeah.
That's an 83% difference.
That's I think the gamblers call that a bad beat is what that is.
They do. And I think, I don't know why you and I both read this article this week, and it was just shocking that it's hard enough to time the market when you don't have leverage, but when you have leverage or you utilize leverage, it just becomes so much more treacherous that if you would just calm down and take the return of 28%, you wouldn't be down 65%.
Yeah. It's a tough one to explain to the spouse if you're out there picking some stocks.
I think it's a tough one to explain to yourself because they don't even understand it. Like that's the funny thing,
Yeah, that makes sense.
Okay, Dan. Well, let's do a show. Anything? What are you doing for your birthday? You used to love peanut butter pie, but then post-COVID, peanut butter tastes different to you. Is this a HIPAA thing? Am I messing up we've
discussed it on the show before.
Okay, good. So no peanut butter pie today?
Presumably not. Although I always hold out hope. I sample peanut butter semi-regularly just to see how much of it comes back. And it's much closer than it used to be. Like peanut butter M&Ms actually taste somewhat like I remember them at this point. So I'm optimistic that I will be able to truly enjoy a piece of peanut butter pie.
Did you hear the vacuum seal there?
I did. I was trying to ignore it.
Oh, I wasn't going to bring it up myself. All right, let's do the show. Yeah, let's do this. Airlock is back. Andy's right. Hi, Jen. How are you? Hello, Christina. Looks like Kristana. Well, help me out here, Dane. What do we got?
Yeah, Kristana is how I would go with that.
All right. Well, if I mispronounced your name, I'm sorry. 3, 2, 1. This week on the Pete the Planner Show, we answer your money questions. Here's how the show works. You email us askpete@petetheplanner.com. That's askpete@petetheplanner.com. And here's what may occur. We may talk about your question and answer said question on this here radio program and podcast. By the way, if you want to listen to the show, if you missed any part of it, just go to wherever you get your podcast and search Pete the Planner. Damian Dunn joins me as always, and it happens to be the day of his birth. Well, the anniversary of the day of his birth.
Yeah.
Hello, Dame.
Hello, Pete.
You are older than me, well, forever, but for 35 days, you are. I guess with integers, you'd be a year older.
Means I can just tell you how things used to be in the good old days.
Yeah. All right. Fun topic today, but we have I'll give you the topic, and then Dan, we got to hit some rules on this one because I don't want it to get weird. Okay. Dane, we're talking about spotting red flags that might exist with financial advisors. Okay. So that is to say, a financial advisor says something or does something or whatever, and beware. So that's the topic. But here's the ground rule that's very important. We are not at all anti financial advisor. In fact, we're very pro financial advisor. We think everyone should have one. So today isn't really about crooks. It's about mismatches, right? It's like, we've all been on a date, not as adults because I've been married the whole time, but we've all been a date where just not the right partner for you, but the person's perfectly great. It's just not for you.
Yeah, I think it's really important to keep in mind that, just like you said, there can be just really bad matches, and maybe one person's really interested in that having a professional relationship, the other person is not. That's definitely not a relationship you want to try and pursue or force. You want to find somebody that you can partner with that's got your best interest in mind, that is going to give you the time, the attention that you deserve, and especially in something as important as this.
So here's the great paradox of financial advice, especially seeking it from a paid professional. People crave guidance, but absolutely fear being sold to. And so I'm not saying take everything with a grain of salt, because that's not the point. But Dame, I think people naturally take advice with a grain of salt because they're entering into a relationship in which they compensate a person to guide them. So that guidance can feel as though it's impacted by the compensation itself.
Yeah, until you, as the advisor, can prove your worth to them, that you are who you say you are. I mean, there's going to be some questions about your motives on what you're doing, what you're saying, maybe the products that you're suggesting to them. Is there bias in the selections that you're making? Because this, as I said, is a very, very important topic, sensitive topic, one that's going to determine the long-term success and enjoyment of a big portion of somebody's life. And they want to make sure that you, I should say, have, as the advisor, have their best interests in mind. And until there is that floor established, it could be contentious.
Now, Dave, I don't know how you feel, so I'll put this out there, and then feel free to swat it back my way with your pickleball paddle. By the way, is it a racket or a paddle? What do you use for pickleball?
I think it's a racket, but I could be, I don't know. I guess I'm getting to that age. I should probably find out.
You should. Here's the thing. I actually don't care the compensation structure of a financial advisor. I think in this world, a lot of people if it's commission, they're a crook. I just disagree. They're fee only, they're ethicists and their fiduciary. It doesn't matter. Like, to me, it doesn't matter. It's how the compensation is discussed. I'm curious how you think about that. And then I'll give you an example depending on how you feel, or I might just bail on this topic out of embarrassment.
Anytime you're talking about compensation, the conversation has to be very transparent. And if there's any uh, pausing, any reluctance to discuss how that person's going to get paid, that's one of the red flags. We'll probably get to that in another segment and deeper discussion. But um, there are there are flaws with every compensation model if somebody wants to lean into it, and there are advisors who successfully navigate professional relationships regardless of the compensation model. So I have ones that I prefer just because I think they're better fits, maybe philosophically with how I would run a practice if I were doing that today. But I think this doesn't have to be a deal breaker as long as the person you are working with is doing what they should be doing for you.
I was on a call. I'm part of our business development mechanism here at Your Money Line. We're doing a demo for actually a retirement plan advisor, like an industry professional, to see about a partnership. And then in the call yesterday, the guy was like, "Well, let's discuss the elephant in the room, pricing." And I said, I was like, hey, I wasn't contentious. I was like, "Hey, man, that should not be the elephant in the room." Like, I'll just tell you exactly what it is. Like, it's just now time to talk about that. And I think that is the spirit of where this can go awry with a financial advisor. If when it gets to the compensation conversation, if it starts to feel murky and tricky phrases, and I'll give you more examples of that in the next segment, but that's where I start to struggle. Dame, another element of this, and again, we're going to get into specifics in the next segment. We're just setting the ground rules. Here's a dynamic that makes this very difficult. Let's say you've got a relationship between a financial advisor and a client, and it's not good. It's not a good relationship. In 99%, made up statistic, in 99% of situations, the client's going to be the one that's going to have to break it off because the advisor is compensated to keep it going. So talk to me a little bit about that. Hey, you actually should fire clients where you have a mismatch, but the compensation doesn't incent a person to do that.
Very rarely will an advisor fire a client for exactly what you said. They'll justify it by bumping them down a service level or a grade in their book, just to retain that revenue. Because gosh, there may be a number of reasons, but that's the common path for advisors. You, as the client, as the customer, you're going to have to be the one that's proactive on this because they are, as Pete said, incentivized to keep you around. And by the way, I understand there's plenty of internal momentum when it comes to finances. People don't change banks very often because it's just a hassle. And when you're thinking about changing advisors and something like this, again, it's going to be a hassle. You're going to have to go and interview some additional advisors and figure out if there's a new, better approach that somebody else can give you that attention that you deserve, as well as just going through the process of signing new paperwork. Now, thankfully, it's all done pretty much digitally these days. It's a lot easier and a lot faster. But then the accounts have to transfer and you have the additional meetings to get everything set up. And it's just a lot of time and effort to do that. But I would argue it's absolutely in your own best interest and worth your time to break away from an advisor you feel isn't a good match from you. So it's one of those things you just kind of got to do.
Did you remember when you were first getting clients young in the business and you'd come across you have a prospect, and that's the thing, they're still called prospects. Yeah. There's nothing wrong with that. Yeah. And you knew they were going to be a bad match for you based on their needs and personality. And you just thought yourself, man, this is going to be a pain in the neck, but the money's worth it. Like, that's an element of this too. And it's what we sort of just talked about, but an advisor knows within 5 minutes, but they just aren't incented to solve that problem from the start. So enough generalities. Dame, coming up after the break, the red flags Usually you just hear them at Starbucks. I love sitting at a Starbucks hearing a financial advisor chat up a couple. It's one of my favorite things in the world to do. So we'll talk about what I might hear and what you might hear. All that's next on the Pete the Planner Show. I'm Pete the Planner. This portion of the program is brought to you by Herculean Meal Prep. You know, one of the hardest parts of being an adult isn't paying bills or figuring out which streaming service raised its prices again. It's figuring out what to eat for lunch. How did we get there? Every single day, what do I eat for lunch? It's hard. That's why I eat Herculean Meal Prep every stinking day. I'm not kidding. These are what I put in my face every day, and they aren't microwave sadness meals. They're actually delicious and healthy. They've somehow cracked the code on making food taste great and keep you and me on track. I can grab a Herculean meal, heat it up, and in 3 minutes and 45 seconds, boom, or beep, I'm eating a smash burger bowl, a salmon with pesto pasta, or a ridiculous buffalo chicken mac and cheese that somehow they figured out how not to make it kill me. They've basically removed all of my excuses for eating poorly. And look, I'm not just saying this because they sponsor the show. As I've told you, I'm only taking sponsors of things I actually use. I'm saying it because I literally open my freezer and smile when I see those little black Herculean containers staring back at me, little trays of discipline and joy. There's 16 in my freezer out there right now. So if you want to eat better and save time and stop pretending Meal Prep Sunday is ever going to happen, go to HerculeanMealPrep.com or visit one of their indie locations and tell them Pete the Planner sent you. And you can join me in the Herculean lifestyle. One microwave beep at a time.
I don't know if anybody from Herculean is listening to this. I hope they are. But once upon a time, there was a very limited run of a special production called Pete's Eats that we did. And I think it would be amazing if they did just like a couple special meals. They're like Herculean meal prep or meals, Pete's Eats special with your face right on that box.
I've told you, I want to go to their prep kitchen. I want to like go. You remember I watched the Food Network back in the day, and they take you inside the Buffalo Wild Wings test kitchen. And they're like, "Oh, we're making a new sauce. It's burn your face off cheese flavored." And then people would taste it with little wooden sticks. I've always wanted to be a wooden stick licker. You know what I mean? Like I'm gonna put this in the market.
I'm gonna say yes, just because I don't want you to explain it.
I literally went to Herculean yesterday on the way back from a meeting, and there are 16 meals in our fridger out there. It's called.
Yeah,
a lot of people call it that.
Of course it is.
Okay. Well,
I mean that's 3 weeks, Pete.
Yeah, dude. I got some. I told you last week on the show, I got some travel coming up. Then it is. You got one night in Vegas. I have one night in Vegas coming up in like 2 weeks. It's to myself. I got to go to this happy hour thing. I could go and hey, I'm happy. Then I could go do what I want. What do you do one night in Vegas by yourself?
Probably sit in my room a lot. Honestly.
Yeah. I mean, there's gonna be a lot of that. But here are the options I'm thinking about. I mean, here are the natural options, right? Go to a nice restaurant.
I was going to say the tees up for you very well because there's a lot of good places that you could choose to go have a meal.
Go to a show. Go gamble. And go find myself in other forms of debauchery. I don't even know what that means.
Yeah, let's not do that one. Would you pay to go see a professional comedian in Vegas?
Here's the secret. Can you hear that noise?
Yes.
You can?
Yeah.
Gosh, it's a bad time for people to do things in this building that make noise. I don't enjoy comedy. It's a weird thing. I am uncomfortable going to a comedy show. And it's not that I'm some comedy wizard, because clearly I'm not. It's just sort of when you know the secret behind it a little bit, it takes the magic out of it. I don't know. That sounds absurd, and I apologize.
I just thought you didn't want to go because you're afraid people would recognize you.
No, that way. No, that's not it. I think I'm going to go to a French restaurant that is not Herculean meal prep, and so I'm going to need to eat those literally every day of my life. Therefore,
it'll be worth it.
Okay, Dan. Back to the show. Actual red flags. Like, let's give actual content.
Okay.
3, 2, 1. Back on the Pete the Planner show, talking how do you spot red flags with a financial advisor, as we set the ground rules in the last segment, if you happen to have missed it. We're not vilifying or demonizing financial advisors. We want you to have a financial advisor. In most cases, you've just got the wrong one and they've got the wrong you. Just a bad fit. So we're going to help you understand some very specific red flags around that and what to do about it. So this one is a little dubious. Okay. So this first one is a little dubious. I mentioned we're not trying to do like some sort of gotcha expose here, but guarantees of high returns or special access or exclusive access to an investment, that's usually hogwash, and it should raise your eyebrow a bit.
Yeah. Are we going to talk about our friend who's been splashed across the news over the
Maybe not by name.
Yeah.
I mean, not for any reason. I just don't want to get involved again.
Yeah. So you will run across this and is as uncommon as Pete and I would like to think it is. And I guess on percentage, it probably is uncommon. But man, for the right advisor, a specific kind of advisor, not the right advisor, a specific kind of advisor who is looking for very specific clients who they can lean into and be that comforting professional who is going to take care of them and promise them the world. If you know that you are susceptible to a little bit of anxiety in this particular area, and they know that too, and they are promising you guaranteed returns, one of two things is about to happen. One, they're going to sell you an annuity, or two, they don't have your best interests in mind. And that's probably as specific as we can get with something like that.
Yeah. Oh, that was a weird sound. Did you hear that? Anyway, here's how I think of this too. I'm going to paint a picture for you. Let's say you've never had a financial advisor. You've been working a job in your late 40s, and now you're early 50s, and you got a bunch of money, but you just left that job. So now you have this rollover, right? You can move your 401k into an IRA. You've never had an advisor. They've always been a little bit mysterious. You go meet with one who might be the wrong one. The person says, yeah, well, actually, we can get you guaranteed 9%. And you think to yourself, wow, I mean, I have no reason to think this person's feeding me baloney because I've literally never talked to a financial advisor. And maybe that's why people go to financial advisors. So it's that little nugget alone that scares me a lot. It's just the lack of edification around what financial advisors are able to do. How about this? And I pride our show in doing the opposite of this. Is we try not to use jargon on this show to make you feel like you need us. We'd rather provide you clarity by not using jargon and using more approachable words. But if you go to an advisor and they're jargoning you hard and they're not giving you the window to get that clarity you need, Dame, that's a little concerning, not from a scruples standpoint, but more from it may not be the best match for you.
There may be plenty of complex things that are going on behind the scenes with a financial advisor trying to, make all the pieces fit together. The bottom line, though, is that a financial advisor needs to be an excellent communicator, and trying to dazzle somebody with lots of words they don't understand shouldn't at least go very far with something like this. They need to have the heart of a teacher who recognizes when somebody may not be quite keeping up with the conversation. Slow it back down. Ask if there are questions. And if there are questions, answer them clearly, completely, in a way that is understandable by whoever they're sitting across the table with. And if they refuse to do that, that's probably not going to be a good fit for you.
How about over personalization? If a person, like, I love when a professional is able to say, if I were in your situation, this is what I would do and not do. There's some value in that.
Mm-hmm.
But sometimes it gets weird, right? It's like, well, I'd never do that with my own money. And when you hear that, it is a sort of a magic phrase that can talk someone into anything via judgment and shame. And so if you ever hear, oh, I would never do that with my money, with the right tone, I would actually be like, uh-oh, this isn't good.
I bet there is a lot of that happening within the last 5 years, specifically around the topic of cryptocurrency in portfolios. Um, I have this conversation. I've had this conversation multiple times in the last week, actually, with people that we help at Your Money Line. And I don't have to say it's not something I would necessarily do with my own money, but there's ways to frame conversations like that. And so it's finding a solution for you. That's what the financial advisor is there for, is to make it all work for you. Now, they may have very strong opinions on how they want to try and structure that for your ultimate goal, achieving your ultimate goal. But if there are certain things that you want to do with that money, that absolutely needs to be considered and part of the conversation. And if they make you feel guilty or less than for wanting to do something like that with that cash, not a good relationship.
Now let's talk about compensation, because my thoughts on this one have evolved and probably spun around in circles over the last 25 years. I think if you're having a conversation about your money and your plan with your advisor, and compensation is the elephant in the room, it's not being talked about until the very last second, that's not great. And it doesn't matter whether it's commission or fee based. I think that's not a great thing. Like, let's say I'm a commission based advisor, Dame, and you're my new prospect. I'm meeting with you, and hey, before we get started, I know at some point in time you're going to want to know how I get paid. So I'd just like to just tell you right now, I'm a commission based advisor. And for some people that can be uncomfortable. It can make you think that I'm going to try to find things to sell you so I can make a living. And I absolutely acknowledge that feeling might be valid for some. But what I think you'll find with me is I'm incredibly transparent. I'll tell you what things cost along the way. And my goal is to lead you in the right direction. If the end of our discussion today, our very first discussion, you start to get a sense that that's not the case, it probably won't be a good fit for you. And so that's okay.
Yeah. And
that's what I would say.
I think that's a reasonable explanation, even if that's the case for that advisor, and they put it out there and they are true and genuine as a professional, still might not be a good fit for somebody, just because they may feel like they are pressured to make purchases or decisions that they're just not ready to do. When it's all under the one wrapper of an advisory fee, there's less pressure to make a decision or the immediacy of making that decision on something. Whether that's the actual case or not, who knows? It rarely is, but it's not hard to understand why just that structure in general may not be a good fit for some people.
My biggest pet peeve I'm going to have to save for after the break, because it's so long that to start to do it with 50 seconds left is a bad idea. But I will say this. The weird part about that little script I just went through, that little role play, is let's say I put together a $3,000 financial plan for someone. And then on the back of that, they need stuff. They need financial products or accounts. And then I set them up. And then in some instances, whether you like it or not, the person has to get paid a commission. If you're selling them life insurance, or you could say, hey, I'm going to charge you $3,000, and then you're going to need to go spend $1,000 a year at some other life insurance person, or I'll just sell you the life insurance for $1,000 and charge you no fee. I mean, that is quite literally the math of it. And early in my career, when I was involved with that, you just want so badly to not have that conversation, but that is a red flag. So let's do this, Dane. Let's come back. I want to calm down. I want to tell you my biggest pet peeve as it relates to compensation and financial advisors. That is next on the Pete the Planner Show. I am Pete the Planner. This one drives me crazy. We've talked about it on the show. It just drives me crazy. And I saw a commercial up for it the other day. And then like an hour later, I was on the same station. The commercial came back, and Mrs. Planner's just in the room. And I'm just getting hot about it. She's like, hey, I don't care. I'm like, what don't you see? He's like, yeah, hey, you've come to the wrong place.
Give Give me some more, what was that? Up chocolate.
Oh man. I sent Dame a picture of my up chocolate that had slave free embossed on the piece of candy. Dame, it kills the vibe.
I think so. If I've never seen chocolate done quite that way before, but I'm not a big chocolate guy either.
Yeah.
But the slave free was kind of
It's a bit much.
yeah.
All right, let's just get back into it. I might be a shorter show, but not because I'm trying to do a shorter show, because I'm just like so passionate. I just want to say so badly what frustrates me. It might be all 9 minutes of this. I don't know.
Sorry, Jeremiah.
Yeah, well, Jeremiah's gonna have to just deal with it. Okay, let's go. 3, 2, 1. Back on the Pete the Planner show, talking red flags for financial advisors. We want you to have a financial advisor. We don't think they're crooks. We just happen to think sometimes the pairing is bad. So in this segment of the Pete the Planner show, if you missed any of this, you can go, of course, the wherever you get your podcast and search Pete the Planner and listen to the rest of the show. But in this segment, we're going to talk about the 3 C's: clarity, consistency, and curiosity, of how to choose the right financial advisor. But first, I must give you the thing that causes me so much agitation. And I can't name names, but I'll likely name names. Dame, there is a firm, a fee-only firm, that advertises on television, and the tenor of which they deliver their compensation model frustrates me to no end. We only get paid more when you do better. We only do better when you do better. Something in that regard. You know what I'm talking about, and you know who I'm talking about.
Yes, I do.
It is so intellectually dishonest, in my opinion. It drives me insane. Okay, so first of all, before we explain why I'm unnaturally upset about this, do you care a rip about this?
I probably not as much as you do. I think it's a really good piece of marketing copy for a lot of people.
Okay, so right, we're going to use good piece of marketing copy. I acknowledge that. I think if you're trying to explain compensation to people, doing so in simple terms is helpful. I find this one to be an obfuscation of reality, though. Okay, so Dame, you have $100,000. Okay, and I charge you 1% a year to manage that $100,000. So you pay me, in most cases, out of pocket $1,000, right?
Yeah, sure. Let's just go with it.
Yeah, let's not say most cases. Actually, let's get some clarity there. Do you think in most cases people take the fees out of the account because they're not stroking checks?
Especially if there's IRAs involved, yeah, because that comes out tax free.
Okay, so let's say I make because I'm a genius, you get a 10% return on that account. So you paid $1,000 to me last year to manage it. It is now worth $110,000. So now you got to pay me more. You got to pay me $1,100 instead of $1,000 because I did better for you. Okay.
Right.
So then the next year, the account loses 20%. Okay. Now I still get paid roughly $1,000, but you've just lost $22,000. And it's like, well, I only get paid when you do better. But when you do bad, I still get paid a lot.
Yeah.
And I think that is where the lack of clarity with financial advisors is frustrating. So there's a better way to talk about that, in my opinion, that covers the same concept, but it's just a little bit more transparent. May I sell you those services, Dame, and how I would talk about that?
Yes, absolutely. I am curious as to where you are going to go with this.
This is where I go. And please, it's your birthday. My gift to you, Dave, is that if I'm full of it here, you can just please bludgeon me on the air.
Okay.
Verbally. Please. Because I've been working out. I don't think you could handle me these days. You probably could. You're a lot bigger. And I don't mean bigger. Okay, let's continue.
Yeah.
Hey, I want to tell you how I get compensated for these investment services for you. I get 1%. Get paid 1%. Now, here's the good news. When you make more money, you're happy. And the bad news part of that is you got to pay me more money because it's just 1%. That's how percentages work. Now, the awkward part of this is occasionally we're going to have a down year. It's not because necessarily I know what I'm doing or you're unlucky. There's a lot of different reasons accounts go down, but I'm still going to get 1%. So if we start with $100,000 and I lose you $10,000, you're still going to have to pay me $900 to have lost you $10,000. And it doesn't mean I haven't done my job. Doesn't mean I'm not putting work in. It's just the nature of the ebbs and flows of the market. So over time, we find ourselves aligned in making your assets go up theoretically, and I'm compensated at 1% the entire time. So I don't want you to think that occasionally you can't lose money, because you can. These are securities, and I will continue to get paid when that happens. I just want to get out front with you. All right, Dame, what do you do?
I think it's very reasonable. I would hope that the majority of advisors, when they're talking through this kind of compensation structure, are saying that, hey, in good times and bad, up markets and down, I'm still going to get 1% or whatever that fee is, taken out quarterly, divided up and taken out quarterly of your account value. And it just means that I am there to help try and guide you forward with the right investments, the right strategy, maybe prevent you from making a mistake that you might have otherwise made if you were doing this on your own, but then also to take those tough phone calls when you are uneasy and you're full of anxiety about what's going on. We'll be here and we'll help you figure that out. So there's definitely a way to message this and communicate it better. But I agree that the company that uses the tagline that you mentioned earlier, it sounds good, but it's a lot more than that.
The other thing you can do is just say, okay, well, what do you get every year from me? You're going to get me, just like you said, hopefully trying to prevent you from making silly mistakes. And then I'm going to prepare a financial plan for you every year. And the fee you pay on your investments covers that plan. There's not a separate planning fee.
There's all sorts of stuff out there now, and it's changed a lot since you and I were doing this, is how we were doing our professional skills. There are calendars out there for advisors that there's something every month. There's a touch point or something they're covering every month for people. And it's really, really in depth and holistic for the vast majority of their clients. So it's gone are the days of just investment management, portfolio management, and updating a financial plan once a year for a lot of advisors. Some are still going to do that because maybe that's all they can afford to do with the amount of clients that they've got. But for a higher touch financial advisor, there's a lot more on the menu on what you could expect.
The next C, so the first is clarity. How do you talk about compensation? How do you talk about investments? How do you talk about planning? The second is consistency. Are their recommendations stable, or do they just randomly call you up out of the blue and it's not consistent with their normal mode of operations? Dame, this is a massive red flag to me. If out of nowhere your advisor's like, hey, and it's like, what? We talk once, maybe twice a year, and unless you're telling me the world is exploding, don't hit me with a random idea. I know people want that. That's the crazy thing. People want their advisor to go, I saw this micro cap. I want to talk to you. You don't want that. You literally don't want anyone to do that.
Gosh, one of the very first years I was probably in the business, when I was not even a CFP, just learning or helping somebody run their business, I remember very clearly that we called, I think, almost everybody that had an annuity with him when there was a new one that was out. And it was time to say, hey, this is a better mousetrap, and I think it works really well for what you're trying to do. And did that advisor get compensated on all those annuities that we rewrote? Yes, he did, probably to the tune of about 7% of the money that got rolled over. So does it mean it wasn't a good fit or didn't make sense? Nope, not at all. But that's not a conversation or a phone call you get regularly in that situation.
The final C is curiosity, and this is the one I think is arguably the most important other than clarity. If they don't ask you more questions than you ask them, don't do it, man. They have to have curiosity about you and your financial situation. They can't have all the answers before they know stuff about you. That's a big deal. So let's do this. We come back after the break. We're going to do biggest waste of money in the week and the news. But I do want to hit you with one more tip about financial flags, red flags for financial advisors. All that's next on the Pete the Planner Show. I'm Pete the Planner. Yeah, I'm going to come after Blom. Before we do news, I want to hit him with a little sauce.
A little extra.
Okay. Blom's weird today.
Wonderful.
That's just weird, but we'll see. We'll see. Because you're not going to guess. I'm not having you guess anything.
Oh, okay. Well, this is totally different.
Yeah, well. Gosh, I wasn't trying to make this show go fast. It just went fast. Oh man, David, this is what's happening actually. Excellent show, just so serious. I know. I was working out this morning. I was telling my buddy because I had the show today, and I'm like, gosh, I had like not a lot of juice going this morning. I was like, I don't know how I'm going to be remotely entertaining for an hour today because I just don't feel it.
Oh well, maybe this is a value tilted show instead of entertaining.
I also like the idea that I think that people think this is entertaining. Oh boy. So we work at a pretty fun place. Mm-hmm. Earlier this week, I showed up to work and someone had hung a canvas of art on one of our walls that is like an AI generated image of one of our software engineers dressed up as a wizard. They just hung it on the wall. No one knows who did it, but it's like the greatest, weirdest thing ever, Dame. And it was, I saw it happen and I was like, gosh, this is a weird place. And I love every second of it.
It really makes me hope that there are additions to the weirdness that just pop up every once in a while. I think it's stuff like that just puts a smile on everybody's face.
I think it just like you work so much with your coworkers. You're with each other all the time. I want to have a good time. I want to like accomplish things and have fun. I just want to have fun though. I mean, we're with them all the time.
Yeah, it's great. I mean, it wasn't malicious at all. I mean, it's just it's awesome. It's great. I hope there's a gallery that starts in our office soon.
Be lovely. All right, let's do this. Weird Blom. Sorry, why so serious, David? I don't know. There we go. A little something for you, a little juice. Oh, Dame, here's something for you. Okay. I was actually going to start the show this way, and this might describe why I'm a little down today, just energy-wise. So I took a couple of the boys out for happy hour last night in the office here, some of the younger fellas, and Chad, who's not a younger fella, but he's younger than us. So I'm like, yeah, old man will take some people out, buy him some drinks and some heavy apps, if you will. So I take the fellas out. And I mean, you remember when you were a young guy at work and the older guys take you out. It's like kind of, I'm not saying it was cool, but it's just like if it's kind of, yeah. I remember doing it and it was a nice feeling. So I was like, let's see if we can be on the other side of this. You know what I'm saying?
Sure.
So we get to the place and we're at a little bar table of 4. And Chad, again, old guard, sitting with me. And we're about to order drinks. We let the young bucks give it a shot here first. And so they order. And as they're ordering, both of them are pulling out their IDs as they order. And it was like a nice restaurant. And handing it to the bartender person who was called a bartender. And Chad and I are just like, I have not been at a place where someone is in my party that is carded in probably 20 years.
Yeah.
I felt so old. So the guy's like, and also the guy's like young enough that the bartender was actually needing to check. And then he looks over at me and I'm just like, don't bother, man. We're not doing this. It was just funny. I was just like, man, gosh, so fast, the old guy.
Yeah, it happens before you know it, but here we are.
I have to be honest. I'm really into embracing the fact that I'm old now. Like, that's not to say that it's an excuse to not be fit or healthy or whatever. But it's more of just like, I don't want to be the person that doesn't think they're almost 50 because I'm almost 50,
Mhm.
and I'm okay with, I don't know when it turned, but I'm kind of okay with it now.
I have my days where I'm okay, and other days like, man, I can't believe this is me.
Well, the weird thing is, okay, so I'll give my age. I'll be 48 in November. I still call myself almost 50, and if I was in denial, I would just tell everyone I'm 47 all the time.
Totally.
You know, um, yeah. I just feel like I'm coming into like my glory years of like I'm not caring as much, but just sort of like not being caught up in all the minutia of things because I've just calmed down a little bit.
Wow. Yeah. All right.
Maybe it was the beverages yesterday.
Yeah. I was like, man, that's an introspective Pete here.
I don't know. I mean, everything can't be 100 miles an hour all the time.
Now you got to slow down to
Don't
90.
tell our board of directors that, by the way. Please, if you're listening, that was AI. It wasn't me. I'm a million miles an hour.
That's right.
Send you that email.
Not 100, a million.
All right. Gosh, would I have some chamomile pre-workout this morning?
Bad choice.
3, 2, 1. This week's biggest waste of money of the week, right here on the Pete the Planner Show, is Denon Plus Audio subscription. Denon Plus reimagines how you experience premium audio with a subscription. It keeps you ahead of the tech curve, starting with the Denon Pearl True wireless earbuds, and now expanding to Denon Home wireless speakers. Members enjoy annual device upgrades, accidental loss protection, and exclusive perks across Denon's portfolio. Denon Pearl earbuds leverage no one cares. Here's the point, Dame. You don't buy the headphones. You subscribe to the headphones. So you pay, in some instances, $9.99 a month for headphones. And for the home speaker, you pay a down payment of like $60, and then you pay a subscription. And so, Dame, as I'm thinking about this, is like, obviously subscriptions have their place. I don't want to subscribe to my headphones.
No, I'm not here for this at all. I mean, I don't know if any of them actually came to fruition, but there was talk a few years ago, like certain car companies were going to make you pay a subscription for features in the car, like seat heaters. Like they wouldn't work unless you paid for them monthly going forward. You just couldn't buy them up front. You had to pay for them ongoing, which yikes. I understand the subscription model and why, it's attractive to businesses, but again, let's not use everything. Use that compensation for everything. There's fatigue there. I'm tired. I'm old. I'm tired of it.
The old Danny Dunn joke, a friend of the show, also my cousin, also an incredible comedian who's on tour right now. His old joke is Rogaine is just a subscription to your own hair, because if you stop taking it, it stops working. And so therefore, if you lose your job, you lose your hair. It's like, it's really good. Dane, one last note I wanted to make about red flags for financial advisors. And I think this is super, super compelling way to know if you're skeptical. If you're like, I need one last thing to figure this out, this is the one. Not everyone should use this. This is if you're feeling unsure about like, is this good for me? This is an interesting one. It's called the walkaway test. If you go to your advisor and you say, hey, can I take this plan and do it myself? If they go no, then I think you got a problem, right? Because the plan is so complicated in theory that you couldn't operate it on yourself, and that they have the skeleton key to unlock the whole thing. I know, Dame, I am oversimplifying this, and that's arguably reductive. But I also think in the spirit of it, if you're so unsure at the very end and you say, at some point, let's say 2-3 years down the road, this just isn't working, or I'm not finding value, can I just take the plan and operate on myself, and they say, no, you wouldn't really be able to, then Dame, I think it's bad. What, any thoughts?
I think that could be true for some people. The plans aren't necessarily complicated enough that the individual couldn't handle it themselves. But occasionally there are circumstances or certain structures or products that need to be in there, or access to certain products, which I know we said is a potential red flag, but occasionally there are things that you have to get through an advisor and that are just good fits for what you're trying to accomplish. Or maybe not an advisor, but somebody else. So I get it. I don't think that's a lock guarantee, but I think it's a really interesting test. Like, is this doable by me as an individual? And by the way, you should absolutely get a copy of your plan when it's created for you to do whatever the heck you want with it. It shouldn't remain in the custody of the advisor who created it. So that's just the last little thing I'll throw in there.
Dane, what's in the news this?
Well, since it was mentioned in our comments during the live stream, I'll go ahead and start with Reddit traders are cooking up another meme stock frenzy, this time with Beyond Meat.
Oh, I saw that.
The plant-based burger maker stock surged nearly 250% at one point this week, driven by social media hype and a new distribution deal with Walmart. Leading the charge is a Dubai real estate developer known online as Capybara Stocks. He claims to have bought 4% of Beyond Meat's shares and told the Business Insider publication that the company's recent debt swap could actually be a good sign. The swap quadrupled the number of shares and sent prices tumbling from just over $2 to around 50 cents last week. But the stock rebounded to close at $3.62 a share at one point this week. Dramatic twist for a brand that once symbolized the plant-based revolution. Beyond Meat went public in 2019 at $230 a share. But consumer appetite for fake meat and investor enthusiasm have both cooled since then.
You know, Dame, I feel like since you picked them as a terrible stock pick years ago, that you're taking pleasure in all of this.
It's an interesting thing to follow a little bit, because I have such a I don't know what you want to call it, strong feeling about their business and what they put on the table, not bring to the table, what they put on the table. I just philosophically completely disagree with what they've got.
What else is in the news?
Well, Amazon's next big hire might be a robot. The company reportedly expects automation to help it avoid hiring about 600,000 workers over the next decade, and even as it plans to double deliveries by 2033, according to internal documents obtained by the New York Times. That also between 2025 and 2027 alone, Amazon could skip onboarding 160,000 new employees in the U.S., saving an estimated 30 cents per package shipped. Now, it may not sound like a bunch, but that adds up to roughly $12.6 billion in cost cuts. The company's robotics team ultimately aims to automate 3/4 of its operations. One economist warns that it could make Amazon, already the nation's second largest employer, a net job destroyer. To soften the image, the New York Times reports that Amazon is pushing executives to use friendlier terms like cobots instead of robots, and to highlight community efforts like their partnership with Toys for Tots.
You know, mixed feelings here. It is efficiency. Some businesses, not talking about ours, some businesses don't feel like their responsibility is to just create jobs. It is to create profit for their shareholders and to find efficiency. Yet it kind of stinks because it sort of feels like more profit for the investors and less humanity for, well, humans.
Yeah.
Mixed feelings.
Yeah, totally get it.
What else is in the news?
America just crossed another staggering milestone in the middle of the government shutdown. The nation's gross debt topped $38 trillion. Yay, we did it, everybody. The fastest $1 trillion jump outside the pandemic. The U.S. was at $37 trillion just this August.
Wait, so we've gone up a trillion in 45 days?
Let's call it 2 months. Let's just give it the. But yeah, economists warn the growing debt means higher inflation and borrowing costs, which can make mortgages, car loans, and everyday goods more expensive. Still, watchdogs note that the country is adding roughly $70,000 in new debt every second.
Yeah. Well, even with the government shutdown, it's still cranking away like that.
Oh, some things you just can't stop, Pete.
That's right. Like Jonathan Taylor. I don't know what I'm saying. Dame, before we go here off the radio this week, last week we doubled down on our prediction of the over, meaning it is going to be the shutdown will last beyond the end of October. We said it's the over. Where do you land right now with 30 seconds left?
Still the over. There's a chance that the new ballroom at the White House will be finished before the government reopens.
Boy, I think it is the over too. I'm going to go December.
Man, I hope it's not that long.
I hope it's not that either, because that would stink. So anyway, Dame, sending good vibes. Because good vibes aren't furloughed. I'm Pete the Planner. This is the Pete the Planner Show.
Nice. I like that.
Yeah. Okay. That was fun.
Yeah.
Man, some real OG. Lil Spence made it in. Dr. Jesse. Gosh, we have PhDs
exactly
the show.
That's exactly what I thought when I saw that pop up. I was like, oh man, are we a case study for this guy? Just
like I mean, we've got obviously Rev Renfro. She's an accomplished person, and with age can come greater knowing about who we are, what we like, and what is worth stressing over or not. Doctor, I agree, Doctor. Cigar Chief, I've embraced being an old man, almost 60 here. Yeah, I kind of like it. I don't use it as an excuse. I kind of use it as an empowerment for myself, but I don't know, maybe not a thing to talk about with a fella on his birthday.
It doesn't bother me.
Okay. Do you wish you were a doctor?
Dr. Dunn?
Yeah, like if like a Dr. Dame.
Mm-hmm. What would you be a doctor in if you were a doctor?
Tomfoolery. A THD. I don't know what that means. I mean, I like to always try to be as honest as I can, but I'm going to be very transparent here. I would be unbearable if people called me doctor.
Just, you'd be that guy.
I probably would. It's like if I was good looking, I would be unbelievably terrible to be around.
Dr. Jesse replied, little bit. And I'm wondering if that's in response to my question if we are a case study for him.
All right, Dane. Well, good news is neither of us have to worry about being so good looking that we're jerks.
Nope.
Well, I mean, sorry.
That's fine.
Happy birthday, Dame. If you were here, I would
share Herculean.
You know, I would. What would you? I would.
Man.
And by share, I mean not like the one I'm eating, but I'd let you have your own.
That's really significant.
Next time you're down here, you know what? I'll let you pick one.
Appreciate that. I'll make a special trip.
Well, don't do that. All right, everybody, stay getting money.